Okay, here you go. My investment story. That is the topic for tonight's webinar. Just some intro slides. Emin, that's my name. CFA stands for Chartered Financial Analyst. I am a regional investment speaker and I specialize in this area called fundamental analysis. So basically, there are two main schools of thoughts in terms of investing. One is FA. FA stands for fundamental analysis. This is what I do. And the other one is actually called TA. TA stands for technical analysis. So basically, for TA guys, they look a lot at the charts. So they believe that the charts can map up human behavior. And once they see patterns in the charts, they believe that the pattern will be repeated, and they make investment decision based on that. So for FA, for us, we actually believe in the business. Okay. So to us, we are not just buying a counter that moves or, something that price and move. We are actually buying the business. And of course, once you are buying the business, what is most important to us is the bottom line and the profits. Okay, so that is more for FA. So obviously, the way I actually manage my investments from an FA perspective, which I'll share a lot more coming soon. Standard disclaimer, long story short, make money, be happy, lose money, don't scold me. Okay, so this is how I want to begin my story. And of course, this is what I hope most investors will do when they begin their investment journey. Okay, I think we all know by now, investing is risky. Okay, so the question is why invest in the first place? Of course, a lot of people just say, make money, make money. Okay, so the question is, make how much? If your answer is the more the merrier, then that's it. You're actually bound to lose. Okay, so as we all know, if let's say your investment is governed by greed, you're actually using greed to manage your investing, then obviously, just like a lot of other things, you just end up in trouble. Okay, so really, especially for the beginners, even those who have put one, I would strongly urge you, and of course, those who are married, you may actually want to do this exercise with your spouse, really sit down together and ask why invest in the first place. So let me just give you my example. So of course, I don't invest for fun. Yes, of course, I invest for money, but there's actually a very clear reason why I need to invest and how much money I need. Okay. So, like most Singaporeans, I am also the victim of this monster called inflation. Very scary, very scary. So, in fact, I myself today, I don't dare to walk into any Orchard Road restaurants. So, if I were to visit Orchard Road, okay, I don't dare to simply walk into the restaurant and order any food I like anymore because of inflation. So I'm quite sure, this has been talked about. And the sad fact is this is something that it will always be happening. It's actually always going to stay. Okay, it's not like, only this year we have inflation. Inflation has always been there. And this is the reason why I invest. Okay, so let me be a little bit academia about inflation. So if I were to use statistics as a guide, okay, long-term average inflation rate is about 3%. Okay, long-term average inflation rate is about 3%. So of course, you'll say that no this year is definitely more than 3%. But if you actually spread it over, like for example, the past 10 years, to be fair, over the past decade, there are certain years there's only like 1% inflation, okay, 0.5% inflation, so on and so forth. So if you actually spread it up, yep, the long-term inflation rate is actually about 3%. Now, what does 3% means? 3% means the price will double every 20 years. If let's say on average, inflation rate is about 3% every year. So for every 20 years, price will double. Okay. So on this note, I start worry about my retirement because there will be one day whereby I cannot afford to work. Or even I want to work, nobody want to employ me. So I must save for my retirement. Okay. But the problem is this, whatever I save today, it will get smaller and smaller if I, because of this monster called inflation. So that's why, I really sat down and, asked myself this, how much is actually required for my retirement. So again, I strongly urge you to do this exercise. Now, how do you actually do this exercise? Very simple. So step one here is this: you actually list down what are your basic, what are your expenses, what is your monthly expenses. So I split it into two parts. You split into the basic expenses. So basically, as long as you breathe, you need to spend your food, your transport, your utilities, so on and so forth. And of course, you can have another category called your luxury expenses, your traveling, your fine dining, so on and so forth. Okay. So I just want to give you a sense. This is me and my wife. Of course, you can do it for 1 person or 2 person. So I did it with my wife for 2 person. So currently, for us to sustain our current lifestyle, we need about 4,000 per month. So as you can see here, for my basics, about 3,150. And for luxury, let's say you want to travel like once or twice per year. Want to have some fine dining, okay? So it's about 800, okay? Average out about $800 per month. So about $4,000 per year based on the dollar value today, okay? Based on the current cost. Okay, so please take note when you do this, you don't include cost. As you can see here, I don't include like my kids' expenses, because hopefully when I retire, I don't need to give them any money anymore. And you can see that my mortgage loan expenses is actually also not here. So again, hopefully by the time I retire, I already fully pay off my mortgages. So it's really your expense. Okay, what are the things that you will be still spending as we hit retirement or stop working? So in my case, it's $4,000 based on the current costs. Now, here is the thing. So assuming I will retire 20 years later. So 20 years later, I stop work, okay? Hopefully by choice, okay? Not by force, unfortunately. As you all know, work is never guaranteed. We can actually lose our work anytime. So 20 years later, if inflation continue by 3% per year, which I think is very likely, the basket of goods that cost $4,000 today, the same basket of goods will actually cost $7,000. Okay, I'll put it this way. Inflation of 3%, $7,000 per month is required 20 years later for the same basket of goods. Okay, so this is what inflation means. So if I actually want to sustain my current lifestyle, that means I still must have $7,000 per month, despite the fact that I actually don't have work. So can you see? So this is the reason why I invest. This is the reason why I invest. I don't invest for fun. I really invest because the need is there. So as per what this slide is saying, because when I retire, no job, I actually need $7,000 per month to sustain my current lifestyle. Okay, so if I don't invest, okay, I can't even actually sustain my lifestyle. So a lot of people thought investment is for those who actually are greedy, want to get rich quick. Investment is for those who actually want to live big house and flashy cars. No one. So in fact, for a lot of us, if we don't invest, we may have to get ready to downgrade our lifestyle as we retire. Okay, now do me this little favor. I always like to come to my lessons. Always like to make you all do some mathematics. I think this is the best way for you all to learn. Now, here's the thing. If let's say I want $7,000 per month, so per year I want 84,000. So basically 7,000 times 12, 84,000. So assuming I can generate 6% return from my portfolio. So let's say I have a portfolio of stocks. I can generate 6% return. What should my portfolio size be so that the 6% of this portfolio can give me $84,000 every year? Can I trouble someone to do the maths for me? Okay, so here is the question. So I am actually calculating the amount of retirement fund I need. And let's assume that I can generate 6% return from my retirement fund. Okay, I need $84,000 per year as per this calculation. So the question here is this: what should be the size of my retirement fund be so that 6% of this retirement fund, I get 84,000. Thank you so much, Adam. You got it, huh? Okay, thank you so much. So basically, to generate $7,000 per month, I need to have 1.4 million. So this is how I calculate my target amount. So again, please have a fixed amount. Okay, I realize a lot of people want to invest, want to earn how much, don't know. Okay, so of course, there's two ways. Some is they thought they have enough, then sorry, not enough. Then some is they thought they don't have enough, keep working, then in there got too much. Then that also cause a lot of problem. Okay, so as in all things in life, it's actually good to be very clear of the objective. So in this case, this is my objective. I need to have 1.4 million of investable assets, and I have a house or a roof over my head. Then I am what I call financially free because 1.4 can give me 7,000 per month. Okay, and I have a house, then basically I can live forever. I don't want to work. I am financially free. So this is my investment objective. And again, why I actually took some time to explain this, because with this set cast and stone, you have a very clear picture why you are investing in the first place. Okay, so if you just invest by or listen to stock tip, people buy what, you buy what, then so you just follow the fashion of the month, then obviously you are getting nowhere. Then of course a lot of people end up losing. Okay, whereas in my case, I am very clear. Number one, it's not that I want to invest, it's I need to invest. Can you see? Then your psychology is actually very different already. Number two, I need 1.4 million. So I have a very clear objective. Then of course, this can guide me to a very clear plan how I achieve this 1.4 million. So I really urge all of you here, eventually go and do this exercise. It's going to help your investing so much. Okay, now let me continue my story. So with this objective in place, I got two problems, or either that two investment objectives to be precise. Number one here is this: I need to accumulate 1.4 million in the next 20 years. Okay, I need to have this 1.4. So again, assuming that I will stop work 20 years later. So I need to accumulate this 1.4 million in the next 20 years. Now, if I am just like most Singaporeans, okay, so these are statistically proven. Most Singaporeans have money in two places. Okay, FD and CPF. So these are statistics you all can actually go and find out. So of course, I know that now FD rate is actually slightly higher now, but you cannot assume that that is going to be the case. So on average speaking, so if you talk about FD and CPF, probably you only get about 2% return every year. So if I actually want to accumulate 1.4 million every year, me and my wife, we actually need to save $58,000 for the next 20 years. Or broken down into months, every month me and my wife need to save 4,008. Save, not earn. Save. Okay, again, unfortunately, I'm not in the top 10 earners of Singaporeans. So basically, most of us, we actually probably save only about 20% of our income. Okay, so be able to save about 4,000 or 5,000. That means your income is about 25,000. Then probably the top 10% of the Singapore earners already. Okay, but like for most of us, to actually save this amount is not say cannot then you actually sacrifice a lot of today's pleasure. Like for example, I'm quite sure we want to go for holidays, you want to eat good food, blah blah blah, so on and so forth. And to actually save this is actually not easy. Okay, I'm quite sure some of you can, but for most cannot. So definitely me cannot. So this is the reason why I need to invest, because if I can get 10% return, 10% return, every year we just need to save 25,000, and every month we just need to save $2,000. Also, this is what me and my wife do now. Every month we need to save 2,000, and of course, hopefully the funds go by 10%. Okay, we can achieve our 1.4 million in the next 20 years. So this is my first investment objective. I need 1.4 million. And again, with this objective, I can have a very clear plan, which is number one, save 2,000 every month. Number two, make my money grow by 10%. Now, at this juncture, I just want to introduce you a very important concept called compounding. Compounding. Now, a lot of people always think investing is about, buy low, sell high. Tell me the stock tip, hopefully that buy today, then sell tomorrow, then make money, very happy. Okay, that is not called investing. So at best, I would say is trading. Okay, in fact, most of the time you're speculating or either that gambling. If you're just down there waiting for the next stock tip, hopefully, buy today, hopefully can get rich tomorrow. Okay, that's definitely not investing. So what is investing? Okay, so I really hope that, this statement you can bring back with you today. What is investing? Which is actually for your money to work harder for you, generating higher return over a long-term period. Then this is what we call investing. Again, what is investing? Okay, whereby your money work harder for you, generating higher return for you over a long-term period. That's investing. So instead of having my money earning at 2% return per annum in FD and CPF, I actually need it to have 10%. Okay, so the question is how, and if you're able to make your money grow by 10% per year, then that is investing. Okay, so would be great if you can replicate this table on your own. Then you have a better concept what investing is. Let me just run through this. So let's say, for example, in year one, I save 2,000 per month, okay, work out to about 25,000 per year. End of year one, I would have 25,000. Okay, end of year one is equal to beginning of year two, and assuming that my money can grow at 10% per annum. Okay, so 10% of 25,000, I get 2,005, as you can see here. And if I save another 25,000 at end of year two, I would have 52,500, as you can see here. Okay, so this process should actually go on and on and on. And as you can see, for the next 20 years, I will be able to accumulate my 1.4 million. Okay, so this is how investment should be done or should be visualized. Okay, so for those who keep thinking of buy $1, become $2, that's definitely not investing. Investing is really all your money, how to make sure all your money generate high returns for you. Okay, eventually you actually keep rolling. Okay, then after that, you can actually accumulate wealth to your target amount. Okay, now another point I want to highlight with this table here is this. You can see that initially the money actually grow a bit slower, go by 20,000, 30,000, very slow. But once you actually have accumulated certain wealth, can you see this part? Your money actually grow very quickly, go by 100,000 every year. Okay, so we call this the golden goose. Golden goose. Once you actually grow the golden goose, okay, your golden goose will actually lay the golden egg. So the point I want to put across here is this: please start early. Okay, timing is of essence in investing. Please start early to grow a golden goose. When should you start investing? Yesterday. Yesterday. There's never too early to start. Okay, so concept investing, I need my money to grow by 10%. And now if I were to just happy-go-lucky, doesn't matter now got work, I just spend, don't have to care. Meanwhile, my money grew at 2%. Okay. After 20 years, you can see that, hey, I only have about $600,000 for my retirement. Now, do me this favor. So if I want to maintain my lifestyle with 600,000, spending 84,000 every year. This 600,000 can last for how long? Again, can I just trouble someone to type on to the chat? So basically, I have 600,000. Every year I spend 84,000. Okay. So this 600,000 can last me for how long? Anybody can help me here? Thank you so much. Only about 7 years. Only about 7 years. So imagine you are 65, 7 years later, that's it, all savings gone. Okay. So hopefully, I have actually painted a very important picture here. Number one, we don't invest because we want to get rich, we are greedy. No. So in today's context, most of us actually need to invest. It's actually a need. It's actually a need. Especially if we desire to maintain our current lifestyle. Of course, some people can argue that when we retire, you just stay at home, watch TV, you don't spend money. Of course, sure, if that is your retirement choice, I respect that. But if you actually want to have an active retirement lifestyle, okay, if you want to have an active retirement lifestyle, no choice. You actually have to start preparing today. Okay, thanks for all your reply. Okay, so this is my first investment objective, accumulated 1.4 million. Now, my second objective, after you accumulate 1.4 million, doesn't mean your story ends. So my second objective is you must know how to generate the passive income from this 1.4 million. So able to generate 6%, you also need to do some work. Doesn't mean that, this money you go and pass to some fund manager, you automatically get 6%. No. Okay, so how to generate this passive income? Okay, so of course, again, the most common way that people do now is depend on these three instruments, like CPF Life for the Singaporeans. Once you clear 65 years old, okay, depending on how much money you have with CPF, you actually can get, from like 500 to 2,000 per month, okay, as per this chart here. Of course, another very common instrument is actually this thing called annuities. Also, basically, it's an insurance product. You give the insurance company one lump sum, then you actually get a monthly payout. And of course, the last one is to eat into our savings. Okay, so this is a very common way for Singaporeans to finance their retirement. Okay. So the question is it enough or not? So unfortunately, you do all the sums, all this is definitely not 6%. It's definitely not 6%. So let's say you got 1.4 million, you go and put 200,000 in CPF Life, about 400,000 in CPF Life, about 200,000 annuities. Remaining cash you slowly use, again, is actually not enough. Not enough. Okay, so this is what I do. Okay, so I am now using a series of instruments. Of course, I still use CPF and annuities. I'm not saying they are bad. Okay, each instrument have their pros and cons. I'm actually still using CPF annuities. But the issues with these two instruments is that they cannot give me the returns that I need. So this is the reason why I need to supplement with, dividends and option premium. Option premium, basically instruments that actually give me a regular returns. So currently I have a dividend portfolio. I'm also into options, so that eventually the day I retire, I will have actually passive income from all these different sources. Okay, so again, what I have shared so far, number one, okay, before we invest, please be very clear of your objective. Why are you investing in the first place? And my reason is this: I actually need to fight this monster called inflation. The day when I retire, which is, let's say, 20 years later, okay, I actually need about $7,000 per month. And if I will do nothing, there's no way I can actually get it. So because of that, I actually have two investment objectives. One is I need to have 1.4 million 20 years later. And number two is this 1.4 million must be able to generate 6% return per annum. So this is my objective. Okay, I just want to do a check here since I can't really read your facial expression. If whatever I said so far makes sense, very clear. You all know what I'm talking about. Don't mind just help me type a 1 onto the chat. If I really lost you all, please help me type a 0 on the chat, please. Okay. Thank you, team. Anybody else? If everything's still okay, don't mind just help me type a 1 on the chat, please. And if there's any questions or you lost me somewhere, please help me type a 0. Okay, thank you. Thank you so much. I really, really appreciate it. Okay, great, great. Thank you so much. Okay, now, so I've actually talked about the investment objective. Okay, why I want to invest. Okay, so the next part is actually how I try to achieve my objective. So eventually I have, as of today, I have 3 share portfolio. Okay, the number of portfolios may grow. I started with 1, then after I go to 2, go to 3. So it actually may grow. So of course, things change. There's always new instrument coming up. Okay, it doesn't mean that, I fixed today, then that's it. No, I'm not going to change for next 20 years. No. So things may change. So this is the reason why the fundamentals must be very strong. Okay, like for example, now the latest is the crypto. Then you have to ask yourself, hey, should I invest in crypto? How does crypto contribute to your objective? Okay, so and so forth. The fundamentals are very strong. Okay, but currently, as of now, I have this 3 share investment portfolio. So let me just go into it. So of course, number 1 is my dividend portfolio. So this is where I focus on Singapore blue chips and REITs. Okay, or what I call dividend stocks, Singapore blue chip and REITs. So averagely speaking, I'm getting about 5 to 8% dividend yield from the stocks I invest. Okay. So in fact, this month quite okay. So the what do you call that? The dividends are given quarterly lah. So in the month of May, August, November, February, yeah, I see a dividend coming in, quite happy, quite happy. Okay, so yes, as you can see, these are the dividends coming in. Of course, now I'm still working, so I don't really need the dividends. So I'm actually reinvesting them for fund accumulation. So basically, I get the dividends. I will actually go and buy more REITs or buy more blue chip. Then, like a snowball machine. And of course, on the day I retire, eventually, this dividend is going to be part of the $7,000 expense. Okay. Now, so you can see what is the good thing about dividend portfolio is really like the golden goose. If I can amass to such a state that I only use the dividend, that means my portfolio will always be intact. I won't be touching any money from my portfolio. So assuming let's say 1.4 million is all giving me dividends, I just use $7,000. Okay, and this 1.4 million untouched. Okay, this 1.4 million untouched. Then it can actually last me for a very long time. So in fact, that is again the concept we actually need to have. So for those who actually think about, I need to save a lot of money, then eventually, I start, spending all the money. Okay, that's not the ideal concept. So in fact, today it's actually possible to just use the money generated by a portfolio. Then it will be forever, like everlasting. So in fact, if my dream, of course, this is my dream. Eventually, when I pass on, okay, this portfolio can, be transferred to next generation. And again, it can be something that help to release their stress as well. So this is my one portfolio. I talk about how I buy later, but dividend portfolio, in fact, this is one of the main ones because as per what I mentioned, I actually need dividend at the end of the day. Okay, another very important point I want to bring up here. When I actually talk to a lot of investors, a lot of people actually say that, hey, yeah, Emin, I also share the same investment objective as you. I want to be financially free, whereby my passive income, okay, is greater than my expenses. Okay, then financially free, don't have to work, passive income, greater expenses, can live every after. But then, they have this objective, but then they do anything but generating passive income. For example, if you buy gold, does gold give you a regular payout? Yes or no? Can someone help me here? Okay, if you were to buy gold, does gold actually give you a regular payout? Yes or no? Anybody can help me here? Buy gold, does gold give you a regular payout? No, thank you so much. No. So that's why I never invest in gold. So sometimes very weird. A lot of people say, hey, I also want financial freedom, then I want to buy the gold. So of course, it doesn't make sense. Okay, so hope you get what I mean. I have the objective, then find instrument that meet the objective. That is the correct way to do it. So why am I so focused on dividend portfolio? Because I want passive income. And so far, dividends is one of the best source of passive income, at least to my knowledge. Of course, the other one is rental. A very, very popular among Singaporeans. You have a second property, you rent out. That is also one sort of passive income, but that one has more work. Agree me? So every time you have to go and look for new tenants, then you have to do a bit of property management. This one spoil, this one spoil. But dividend is one of the best. So basically, once you buy, then that's it. Money just come to your account. Okay. Next. I have a growth portfolio. Okay, so this is where I try to look for what we call multi-bagger stocks. Multi-bagger stocks. What are multi-bagger stocks? Basically, stocks whereby the price shoot up very high. So this is a very small portfolio of mine. Okay. So why I do this is because I'm quite someone that spent a lot of time looking at investment. So now and then I actually do see opportunities like this. Then I think since I see it, I myself use it, right? Okay. So of course, it's not always successful. But if I'm successful, because this one we are talking about 100% return per year. Sometimes it's like 100% return in 6 months. Okay. So of course, if I'm actually successful, let's say 3 or 4 times per year, I definitely can accumulate my 1.4 million faster. Who don't want to expedite the process? Of course, if I can retire at 55, I retire at 55. Correct? So this is helping me to retire earlier. Okay, but for this portfolio, I am, like I said, a bit more opportunistic. So basically, I don't invest regularly. When I only see a opportunity, then I just jump in. Okay, if not, I don't. Okay, so this is my second portfolio. Like for example, in this case, this was Riverstone. I actually bought during the COVID period because it's so weird. I mean, it's like at that point in time, Riverstone is, by the way, doing into medical gloves. Okay, they actually sell medical gloves. That time, the demand for medical gloves is actually so strong. There's no reason for the price to drop further. So of course, I actually buy, then yes, okay, so make a little bit of money here. So of course, that can help to expedite my 1.4 million accumulation a bit. Okay. Kim Gyok, thanks for the question. I probably answer the question at the end of the session. So please hold on. For those who have any questions, feel free to key in. I will answer the question at the end of the session. Okay. So yes, that is my second portfolio. Now, recently, I have, in fact, this is only past 1 year. So like I said, investment is a very interesting topic. So far throughout my life, I've invested over the past 20 over years. You actually always get very interesting instrument coming up. Okay. So last year, I actually started into these options. So very interesting. And why I actually go into it is actually because it's actually helped me to generate passive income. Okay, passive income. Just to show you some results. So basically, I put in 24,000. Okay, if you add up on the green, it's actually 24,000. If you just add up very quickly, 24,000. So the money is still there. Okay, so in fact, it has turned about 25,000. And I have generated passive income from this. Okay, I've withdrawn $3,000 already. Okay, so if you go and do the maths, return is actually a lot higher. If I were to use this result, I'm actually getting about 20% return. 20% return. Okay, how I do this, I'm basically selling option premium. Option premium. And of course, eventually this will be another source of passive income, even though it's less passive than dividends. Okay, this one definitely need to do a little bit more work. Okay, have to be a bit more active. So dividends is basically I buy already, then that's it, full stop. Okay, I just collect dividends. So this one is I have to be a buy, sell, buy, sell, buy, sell. So a bit more activity, but the returns is actually a lot higher. But hey, why I do it is because it's actually in line with my objective. Okay, with that, I can actually collect passive income, which is what I need for my retirement. So of course, now again, I actually don't need to use this money. I actually reinvest them either to my dividend portfolio or of course, bumping up my margin account. Okay, so these are my 3 stock portfolios. So again, what I want to stress here is this. Number one, the portfolio should be in line with your objective. Okay, you don't just have a portfolio for sake of portfolio. So as you can see here, my portfolio is actually very focused on passive income. So this is the reason why I have a dividend portfolio. This is the reason why I have an option portfolio. Okay, it's for passive income. Okay, so of course, I also have the objective of accumulating wealth. This is the reason why I have my growth portfolio. Okay, so again, I just want to share why I do what I do. Okay, it's not that because today I feel like it, then I this trade. No, it's actually very clear objective. The other thing I want to stress upon here is this. So when I talk about portfolio, it's about building a system. Building a system. I think the best analogy is about exercising. Okay, I'm quite sure this is very clear. Let's say, for example, we want to be healthy. Okay, we want good health. Okay, it's not about, at the beginning of the year, I'll go and do a marathon, run 42 click. Then for the rest of the year, do absolutely nothing. Okay, no, but rather, okay, maybe this 42 click, you break it down into 20 times. You run 2 click per week, for example. Okay, you have a system, you run regularly 2 clicks per week, then probably you actually get healthier. Okay, rather than a one shot run that 42 click in one day, then rest of you do nothing. Okay, so same thing, investment should also be the same concept. You cannot be like, today I'm free, then I do. Today got my money, then I do. Now busy, I forget about it. No, it should be like a system. So basically, when I talk about portfolio, it should be like a system, like a routine, like a regime, whatever you call it, okay, that you actually do on a regular basis. Then eventually you'll be successful, then you can accumulate wealth. Okay, so this is what investing is about. That means if you ask me, really investing is about setting up this system. What is your system for accumulating wealth? Okay, rather again than, should I buy DBS today? Should I buy DBS tomorrow? No, it's what is your system? Okay, so let me use this slide to illustrate in detail my system. So I have this bank account called saving account. This is where my salary goes in. Then every month, okay, I will pay myself first, what they call it. You will actually put 20% of the salary into this thing called the restricted saving account. So this one, the only way that the money can go is to investment. So I do this on a monthly basis. Then, of course, every month I will invest. Currently, I'm getting dividends. I don't use the dividends. I am also selling my stock sometimes. So you will actually plow back into this restricted saving account. Every month I still pump in. So then after that, you generate returns. So what I like to call, I have sort of like set up a snowballing machine. a snowball machine. So of course, eventually these two get bigger and bigger and bigger. And on the day whereby, okay, these two portions add together 1.4 million, then that's it lah. You won't see me sing and dance anymore. I'll be somewhere enjoying my passive income. So that's my dream. So anyway, my point here is this. When I talk about investment, I invest all the time. It's function more or less. So basically, every month I will invest. Okay, every month I invest. Okay, it's just that certain months I invest more, certain months I invest less. Okay, but every month I invest. So like, for example, the dividend portfolio, so far, I've been investing monthly lah. Every month I'll buy into some REITs or either that some blue chip. Or certain months, of course, when the market drop, I buy more lah. Okay, now, depending on the market opportunities, I will allocate my funds differently in the portfolio. So of course, let's say for growth stocks, I see certain opportunity, then yes, then I actually put more money there. But if let's say this month I don't see an opportunity, then I don't buy growth stock. So for me, growth stock is opportunistic. Okay, so for my options, I actually do it quite regularly. Okay, options, I actually do it quite regularly. So basically, the point I want to put across is like exercising. Okay, if you want to be healthy, you need to exercise regularly. You cannot say that, oh, only when you're free then do. Not free, don't do. And most important is, you must set up the snowballing machine. So if you ask me, this is what investing is about. Okay, so now I have this 3 portfolio, or basically a system in place to lead me to my objective of 1.4 million and achieve a 7,000 monthly passive income. So it's just a function of time now. If everything goes well, of course, I get it earlier. I don't have to wait until 20 years later. But if things don't do well, but I may take a little bit more time, but eventually I know that I will be there. Okay, so hopefully this gives you a guide. Hopefully it'll be interesting so far. It gives you a guide of how you should structure your investing objective, what you want in terms of numbers, then what are the tools for you to achieve your objective. Okay, so again, hopefully it's clear. If you have any questions, I do see some questions coming in. So yes, thank you so much. I will address them at the end of session. Hey, Arvin, you're in town. Okay, hello, Arvin. Okay, now, for those who are actually keen to be like me, build up your stock portfolio. Okay, there must be one core skill you must have. Okay, be it whatever portfolio you do, okay, there must be one core skill that we must have. Okay, which is what the need to invest in the right companies. So be it for dividend stocks, for blue chip, for growth stocks, for options. Options also depend on underlying stocks. Okay, we must know how to choose the companies. So unfortunately, it's not something like I can just do very simply. You still need this fundamental core skill to learn how to pick up the right companies. Then you can create the portfolio. So that's why it's actually very important. Okay, now what do we have to do to make sure that we're investing in the right companies? So number one, we have to make sure that the company is financially healthy. Very important, very important. So in fact, for options, quite interesting. For options, it's actually based on US stocks. Then I realized, a lot of the US companies, the financial health is actually quite interesting. Okay, I'm actually quite surprised to see some of the debt levels that some of the company has. And probably, of course, if you actually do join me further, I can give you illustration. But okay, don't assume. My point here is don't assume that all the big companies are financially healthy. Sometimes when I see it, it really get quite shocking. Okay, that's one. Okay, we also have to make sure that the price is correct. Okay, attractive valuation. Okay, to find the right company, price is correct. So if it's a healthy company, but the price is wrong, sorry, expensive. I also don't think I should get in. And thirdly, the business must be thriving, must be the business that you have faith in. Okay, so again, why am I talking about this? Regardless what kind of stocks you want to buy, regardless what kind of stock portfolio you want to build, you need this fundamental skill set of investing in the right companies. And what is the right company? Healthy financials, attractive valuation, and thriving business. Okay, let me just go into more detail of what I do to choose a healthy financial company, financially healthy company. We do things like cash flow analysis. Okay, like for example, this is very basic. Now, can someone tell me here? Okay, all the companies have to do a P&L statement, profit and loss statement. Okay, can I ask which is the entity that require the companies to do P&L statement? Why does company have to do P&L statement? It's actually for who to see, or who actually requires companies to do P&L statement? Anyone can help me here? Anyone can help me here? Okay. Why does company have to do P&L statement? Thank you so much. Iras, thank you so much. So basically, this net income after tax is what we call accounting profit. Accounting profit, which is for the purpose of tax computation. Okay. Accounting profit is actually not equal to cash profit. Okay, what is cash profit? Cash profit is the profit that is coming in, the core cash is coming into the company. So very important, cash flow analysis, the very basic one is we have to make sure you tell me you make so much money, eventually is actually being converted into cash. So there can be companies whereby, wow, profit very nice, but no cash coming in one. So this is some of the exercise we do. Okay. Of course, there are more. Okay, like for example, we compare CapEx versus operating cash flow. CapEx versus operating cash flow. So what are we trying to see here? So what are CapEx? CapEx are investment. Okay. Whereas operating cash flow is, the cash is coming in. So there are certain companies whereby the cash flow coming in is heavily dependent on the CapEx. Okay, that means you must put in very high CapEx, then you have the cash flow. Once your CapEx is low, or your cash flow is gone. Okay, so of course, these are the companies we don't want to touch. Whereas in this case, can you see my CapEx, once I actually invest, and eventually when I sort of like lower my CapEx, okay, my cash is actually still coming in. That means after you invest, okay, your investment, after fully invested, it can actually bring in, cash flow by itself. Okay, also these are the things we actually look out for under cash flow analysis. It's very important. So there are companies whereby once the CapEx drop, cash flow also drop. That means you always have to keep pumping your money in to get money out. Then of course, that is the business we don't want to invest in. Okay. Then we also see things like financing versus dividend payout. Financing versus dividend payout. So basically, like in this case, financing minus means you actually pay back money. Cash flow from financing activities minus means actually pay back money. Okay, plus means actually borrow money. So this case is actually quite okay. That means I have money. I actually pay back the bank. I actually give dividends. If let's say, for example, I see a company, okay, have always been borrowing money from the bank, at the same time keep giving out dividends. So again, that is what do you call that? A red flag, something we have to worry. How come this bank need money to keep borrowing and yet keep giving out dividends? So something we have to take note of. Okay. So for us, looking at cash flow analysis is very important, okay, to see whether this is a good company, especially for FA, because for FA, we tend to be long-term. When I buy a stock, especially my dividend portfolio, I will hold it for at least 3 to 5 years. So I must make sure the company is financially healthy. So these are the important things I actually tend to pay a lot of attention to. Okay, so of course I have to do some ratio analysis like this, okay, to make sure they actually pass the test. Profit for past 5 years, profit margin, some of the ratios I actually do, okay, to make sure they are financially healthy. Okay. So these are the things I actually look at to make sure company is financially healthy. Okay, next valuation. Okay, attractive valuation. So very simpler ones, we actually look at things like, for example, the PE ratio, price earning ratio. So we see that for $1 of cash, how much money we're actually paying for it. Things like dividend yield. Okay, dividend yield. And of course, things like price to book ratio. So even though they are simple ratios, but of course, the complication comes whereby, okay, certain companies, you can only use certain ratios. Okay, certain companies, certain ratios are preferred. Also, that is the one we actually need to decide. We cannot just simply put that, whatever company we use, we just look at 3 ratio. No. Okay, like for example, price to book, you can use for certain type of companies. Dividend yield can use for certain type of companies. Also, that is something we have to be careful of to make sure we use the right ratio for the type of company to make sure that, we actually value them correctly. Okay, the last part which he asked me, which is the most important to me, we must be confident of the business, especially for FA. So FA, the business is the most important. So there must be some confidence this business will do well. So how do I actually do that? There's 2 aspects. One is I look at the quantitative aspect. I actually compare the capex, total asset, and the revenue. So of course, the most ideal case is when my capex increases, I invest, my asset go up, and it actually turn into revenue. Okay, so this is the most ideal case. Of course, can be cases whereby I keep investing, but my asset reduces or my revenue don't go up. So again, that is another red flag. Also, this is a quantitative aspect. But most of the time, when we actually look at business, we have to look at the qualitative aspect. Okay, like for example, understanding the chairman's statement, what is their plan for growth? Okay, we can actually use certain framework to help us. Okay, like for example, Porter's 5 forces to give us a sense of what are the potential threats that this company is actually facing, and of course, are you comfortable with that? Okay. Okay, eventually, you'll be asking me this question. Wow, like that, it's very hard to find the perfect company, right? So I don't think there is any company whereby, everything also very healthy, the price, everything also right, the business is everything good. So yes, I totally agree with you. Okay. So if you just analyze individually, okay, to want to find everything perfect, very difficult. So what we do is this, we actually usually just compare. So we cannot just anyhow just pick a company. So let's say, for example, most of the time we have this investment team first. Investment team is in THEME. Okay, like for example, okay, this period is inflation. So we ask ourselves, okay, what are the companies that maybe benefit because of inflation? Like for example, your supermarkets, for example, your food courts. Okay, for example, the banks. Okay, so we actually pick up those companies whereby benefit for inflation. Okay, then what we do is, we actually find the actually fill up all the numbers that we actually went through just now. Okay, you actually get a list of criteria. Then usually after comparison, you will actually find a stock that will stand out. And this is a stock I want to buy. This is stock I actually want to keep for 3 to 5 years. And of course, this is stock have the highest probability. Of course, it's not guaranteed, highest probability that it can actually generate the dividends I want, given the growth that I'm looking for. So a lot of times, like I always say, to buy one stock, usually we have to look at 5, we compare and pick up the best one. Okay. Yes, I have actually completed my full investment story. How I actually, from the objective, what I want to achieve, my 1.4 million, 6% return, okay, to creating the portfolio, my dividend portfolio, and to my growth portfolio and my options portfolio. And of course, talk about the core skill. So whatever portfolio, the core skill actually required to build that. Okay, so that's my story. And of course, as a professional investment trainer, I really wish that more people can invest correctly, invest properly. Sometimes it's actually quite sad, after investing for 20 years, a lot of people still say that, stock market is the largest gambling den. I feel so hurt. Okay, I actually took about 7 years to actually go and study investing. So you say that, it's for people to gamble. Okay. Then after that, some people actually say, "Ayo, stock market con people and I put money in all lost." Okay, no. Okay, so a lot of times is you must have the right methodology. And this is where I would like to offer you. Okay, so basically, I'll be running a program called Financial Analysis for Stock Investment. And I really, really hope more people can get the skill sets to actually invest properly, analyze company properly, and eventually build your stock portfolio for your investment objective. Okay, so let me just talk a little bit about this program. Of course, this program aims at empowering you to have the core skill, which is the financial analysis skill, to pick up the right company. Okay, so this program is over 4 sessions, over 9 hours. We will actually go really deep into the financial statements. Okay, financial statements is the backbone here. You will learn how to read balance sheet, P&L statement, cash flow statement, and of course, analyze them. Okay, in-depth profit and loss statement analysis, in-depth cash flow analysis, like we talked about just now. Financial ratio analysis. Again, I actually give you the demonstration. And of course, investment consideration application. So things like, how do we actually review the business? How do we actually look at the valuation? And most importantly, a really hands-on exercise to go through that chart. Remember that last chart? Okay, whereby we compare, and from there, we actually pick up the best company for investment. So basically, this one will summarize everything and give you a step-by-step guide to pick up the best company to invest in. So you actually learn this over 4 sessions in 9 hours. This course is actually accredited by IBF. So it actually was approved by IBF. Which means to say that, so this is just like any other professional course. I would actually peg it like a comparable course will be something like a short course in the tertiary education, like SMU. I know SMU, some of the polys actually also give like short courses. I would believe that this is actually equivalent. Okay, because it actually accredited by IBF. Okay, now, and the good thing about here is this, because it's accredited, so yes, the course fee 1290 is already, you can compare. Okay, if you want, you just go to, like, for example, SMU website, go to NUS website, all the short courses you can see. Okay, so this is definitely already a lot cheaper. And because it's accredited, you can actually get funding. Okay, you can actually get funding. So it depends on your citizenship and your age. So if let's say you are a Singapore citizen, 40 and above, you'll be eligible for 70% funding. Okay, if you are a Singapore citizen or Singapore PR, okay, which is 40 and below, okay, you get 50% funding. And just in case it's confusing, if it's PR above 40 years old, sorry, that one's still 50%. Okay. So this is something I'm actually quite proud of lah. So it's actually not easy to get this accreditation. I believe I took about, is it 6 months? Probably is it 6 to 8 months? A lot of ding dong to actually get this accredited by IBF to actually make sure you can actually get the funding. So think about it, especially if let's say you are a Singapore citizen above 40 years, $387 for a professional course is really a steal. Nowhere else you can get this kind of program with professional accreditation at this kind of price. Put it this way, even you send your daughter or children for tuition, it's definitely worth, it actually costs more than this. I'm quite sure you all know. Okay, on top of that, because it's again IBF related, you can actually use your SkillsFutures credit. Okay, you can actually use your SkillsFutures credit. So basically, it's actually possible to attend the course for free for those who actually say SkillsFutures. Okay. Now there is actually some requirements. To be fair to the funding organization, there are some requirements. So basically, you're required to meet a minimum attendance 75%. As this is a short course, you have to attend all the lessons. Because it's short, you have to attend all the lessons. And attend means you have to turn on the video. Okay, you cannot just off the video to turn on video. That's one. Now, number two, there is an assessment. Okay, you must pass assessment. To pass is more than 60%. Now, what I can say here is this assessment is definitely not meant to fail people. It's just to make sure that you really understand. And based on the past experience, as long as you pay attention, you will pass. And if, let's say, for example, really fail, can retake. Can retake. So again, it's definitely not there to sort of like make sure you fail, make sure I make the money. No. Okay. It's just as what they call it, as a due diligence by the funding organization. Okay. These are the course dates. Okay, it's going to happen in June. Okay, next month. We are going to do it Tuesday, Friday. Now, this is what happened here. The lessons are actually all going to be done through Zoom. As you can see here, the lessons are actually going done to Zoom from 7 to either 9:30 to 10, Tuesday, Friday, Tuesday. The last session will actually be a physical one. It will be done via a classroom. Okay, so the assessment you will come in. It's a pencil paper assessment. Is 30 questions. 30 questions. Yeah. Then after that, once you're done, okay, pass, then that's it. Okay, that means good. So the experience has been quite good. Before the assessment, we will do a revision. And so far, based on feedback of participants, the assessment really helped them to solidify the learning. Okay, so the whole experience actually quite good. So in the end, this assessment actually helped a lot in the learning itself. Okay, so for those who actually want to register, find a bit more, you can actually scan the QR code. Or either that, you can actually click on the website, which my colleague Raymond has already pasted onto the chat. You can actually click on the link. And of course, if there's any questions about the administration, okay, the administration part can be a little bit tricky. How much to pay for this, how much for SkillsFutures. Raymond will be there to help. Okay, Raymond has already pasted his email address there, raymond@abmaxes.com. Anything you can email him to ask more. Now, another thing I want to stress here is this. So this is definitely not a lecture. So far, we are doing like probably 5%, 6%, 7%, that kind of range. Okay, so we are serious about teaching here. We are not like, well, have a class of 20%, 30%, no. So basically, we just need minimum about 5 to start. And we probably have about 5 to 7 packs. So it's more like a group tuition, okay, whereby you really learn. Okay, you have a lot of attention from a trainer, which is me. Okay, we have a lot of interactions. Then you really learn. That's what we want. And maximum only 12 packs. We will never go more than that. Maximum 12 packs. So the experience has been quite interesting. Okay, so yes, for those who actually wish to invest better, have a more structured way to invest, hopefully you can join a program. I'm actually a professional trainer. I teach for a living. So it's not like I got a day job and I teach. No, I teach for a living. I'm actually quite blessed that thousands of people have benefited from my various programs over the past 10 years. So I've been doing this. This is my 12th year already. So I'm actually very thankful. And of course, hopefully you can join us, to learn together, invest together, of course, make money together. Okay. Yes, if there are further questions, you can contact me via Facebook. This is my Facebook account, facebook.com/imchua. And of course, if there's questions on any administration, you can actually contact Raymond. The email address is here, raymond@abmaximus.com. Okay. Okay, good. I want to just take the last 5-10 minutes to answer all the questions that you have put in. I actually see some questions on the chat now. So bear with me for a while. Let me just answer those questions. For those who have more questions, please key in now. Please key in now. I will answer them. Also, while I wait for you all to answer, key in the questions, let me just play a little video on some of the feedbacks of my past participants.
I really enjoy the Try Means course because it really gives me a lot of insights and a lot of things for me to think about, especially when I actually do my investing.
The things I like about this course is the techniques, the thought process, and also the tools and resources that's being deployed in this lesson, because it allows me to adopt a very systematic approach towards investing.
I find that he is a pretty genuine guy, and he has this art of teaching people what he knows. So through his class, I've actually learned 6 of his techniques, criteria on how to select stocks and so on. I find it pretty useful.
Okay, so yep, these are some of the comments, and if you're interested to learn more, you can scan the QR code or either link. Okay, let me just answer some of the questions that was being shared.